All right, let's turn back to the major indexes. Joining me now is Thomas Hayes, chair at Great Hill Capital. Thomas, it's great to see you in the new year, and a little bit of green on the screen today. I think we'll take it, but certainly a bid for some of these technology names. What's behind the market action?
Well, I think you saw prices we know peaked in June. They've been coming down ever since. We're looking forward to the CPI report on Wednesday to confirm that. The market liked on Friday that wage growth seems to be slowing down, so that's a positive thing. What the market didn't like was Mary Daly coming out and talking the market down, saying inflation may be more persistent than thought midday when the market was up big. They talked the market down. Bostic did the same thing, who's generally considered dovish. He says we may have to keep rates higher for longer into 2024. But I think when you look at the economic data, expectations going into earnings, which basically started in earnest on Friday with the big banks, are very low. Earnings are expected to grow negative 4.1% for Q4. And I find that curious because the Atlanta GDP numbers are tracking right now for Q4 at plus 3.8%. So I think we might be in for a positive surprise. It's unlikely that the top 500 companies, did so poorly when you had GDP grow at that clip. So I think things are actually looking constructive moving into earnings and for 2023.
So, well, that's good, right? For 2023, there is that famous Wall Street adage. There are a whole bunch of them. But as goes the first 5 trading days of the new year, so goes that entire year. And I don't know, by your count, today technically is the 5th day. I think we might be a tad bit higher, probably close to break even. But what does give you the impetus to think that we might actually end the year higher for the stock market?
Well, I think if you look, Kristen, expectations are been completely wrong. Going into 2022, consensus expectations were that the S&P 500 would close the year around 5,250. Instead, we got 3,800. Now, everyone's completely pessimistic in the hole. There was a survey by MarketWatch. The average consensus is about 4,000 at the end of 2023. We're at 3,900 right now. So it couldn't be any more opposite. Last year, when they should have been pessimistic, they were optimistic. This year, when they should be probably more optimistic than they are, they're extremely pessimistic. To the points that you made, we did finally have the Santa Claus rally. Santa managed to throw the Grinch out of his sleigh. So that's positive because on average, the 12 months later, you're up 9.8% versus average 8.9%. Then you add the first 5 days of the year, which I think, as you said, did edge out positive. That increases the odds up to 12.9% average since World War II. And then if we get a positive January, that would take the average up close to 16%. So, we don't want to be fooled by randomness. Obviously, anything could happen. But this bodes pretty well, and no one's positioned for it, which is why I like it even more. You still have cash levels at the highest level since the pandemic lows and since the great financial crisis lows. So it really bodes well for push higher on better than low expectations in terms of earnings and in terms of the economy.
Very quickly, I didn't want to cut you off there. We only have about 60 seconds, but where are the opportunities? Where would you be putting money to work?
I think the 2 biggest trades of this year is where no one wants to be. Number one is emerging markets. Dollar's down 10% in the last 2 months. Emerging markets do exceptionally well when the dollar goes down. We've seen it in the last 2 months. That's going to persist for the next couple of years, we believe. China is the biggest weight. We love Alibaba. It's one of our top positions. You can buy it at 2014 prices. The business has grown revenues 800% since. Due to the pessimism of last year, that's in the rearview mirror. And we like Amazon. Okay, no one wants to touch tech or communication services. They've tripled their business since 2008. You can buy it at 2008 prices. They're fixing the warehouse problems. They overexpanded during the pandemic. We think it's an incredible opportunity to buy a high-quality business at a discount.
All right, Thomas Hayes, chair at Great Hill Capital. Thomas, thank you and Happy New Year.